Halloween just ended, and now we're trying to figure out what to buy as we enter the last 2 months of the year. I'm talking about passive income stock I just picked up. Give you a little more explanation about it, so stay tuned and find out what it is. Hope you enjoyed your Halloween. Morning, afternoon, evening. Passive Income Tom bringing another show this Friday or whenever you happen to catch or watch this. Today I'm talking about the stock I picked up this past week and how it could be something you may keep your eye on because there's a lot of talk about recessions. Everybody's always talking about recessions, So you need to stay tuned. You need to figure out what you need to do to add something. This may be a stock you may want to add to your portfolio. Once again, this is not investment advice, but something I'm looking at and something you should also do your own due diligence, figure out, because this may be something you might want to pick up as well. All right. So let me give you a little history of railroads in general, and I'm going to break down the stock I picked up, give them more detail, and you may want to pick up as well because the recession is coming. All right. All right. American railroads are already in a recession with no end in sight. This is by Bloomberg, early last month, October 7th. There's no bottom in sight as a decline in carloads for large U.S. railroads widened to 5.5% in the third quarter, the biggest drop in 3 years. According to weekly reports from the Association of American Railroads, shipments are down for auto, coal, grain, chemicals, consumer goods, and crude oils being the only bright spot right now. The only bright spot. But there are pockets of growth, according to Bloomberg analysts. When there's a railroad recession, that doesn't automatically translate in general economic downturn. The U.S. economy continued to expand when carloads fell in 2015, 2016, and crude by rail boom went bust. All right, some of the other ones I highlight, talking about CSX, Kansas City Southern, Union Pacific, Norfolk Southern. They're all trying to adapt, trying to keep up with the current changes going on in the economy and with their own railroads as well. And then we'll jump on another article off of Investopedia, just in general, so you have a good idea on what it is you're looking at for railroads. The railroad sector is a primer on the economy. Basically, in general, just so you know, railroads in general, even though they're created over 100 years ago, they still have a big importance in them today. Railroad companies operate at a pretty straightforward, obvious business. They charge companies for carrying cargo over the network in rails and rail cars. As I mentioned, there's Union Pacific, Berkshire Hathaway, Norfolk Southern, CSX, Canadian Pacific, Canadian National, and Kansas City Southern. Pretty much basically why rail matters today, nearly 43% of all intercity freight transportation is handled by rail. You may, depending on where you go, you may always see these large, big old trains going by, tooting their horn and everything. But, more than 2/3 of national coal is transported by rail, even though the coal is being on a, not really a popular topic these days. But railroads also carry a large shipment of bulk, such as chemicals, grain, and cars within this country. Specifically the United States, if that's what I'm referring to. If you may happen to catch this from another country, you might have different reasons why railroads are important in your country. Accident rates for trains are pretty low, lower than trucks. So that's a good bright spot. You always see the little car accidents happening, but rails have been proven to be relatively safe for the most part. There are those little headline news stories that do happen once in a while because trains will go off track and cause a lot of damage and possibly killing some people as well. So before I keep rambling on, let me just jump on the stock I picked up. Okay, so I picked up KSU, Kansas City Southern. I didn't buy a whole lot of shares. I only bought one share right now because I think it is a good deal for this stock, but I think it might be too high right now. I'm waiting for a little correction, then I'm gonna pick up some more. But I paid $145.88 for the stock on the 26th, a few days ago. And I'm gonna talk about the history on why it's been doing so well this past year. All right, I'm gonna give you everybody's favorite, Yahoo Finance. Okay, right here, pretty glimpse. This is Thursday right now when I'm recording this. Kansas City Southern is sitting at $140.52. This past year, you can see the little chart, how it's increased from about $98 starting around early January, and that's at $140 now. So it's sort of steady incline over the past year. A couple of dips along the way, but overall, it's continued to go up throughout the year. Currently pays a dividend of 1.444%. I'm sorry, 1.44. Yield is a 1%. It's not one of my high flyers, but I think because the stock is doing so well, like I mentioned, it's been a crazy year in the stock market, but look at that incline, with this stock. It's continued to hold its own and do its own thing, while the economy is going, sideways all year long. Okay, the 1 year target estimate is $152, so it could be reaching its peak, but you never know. And with the economy going the way it is, I think this is a good value for what it is and what you can pick up right now. And so another Yahoo message came out October 23rd. Kansas City Southern is up 8.8% in 1 week, and what you should know. Okay, Kansas City Southern currently has a Zacks rating of number 2, buy. All right, Kansas City Southern is up 8.8% over this past week, while the rest of the railroad industry is up 0.07% over the same time period. So overall, shares looking quite good, well from a longer time frame too, as a monthly price charge of 9.43% compares favorably with the industry 0.3% performance. Okay, so bottom line, taking into account all these elements, you should have come to no surprise that KSU is a buy with a momentum score number of A. So if you've been searching for a fresh stock that's set to rise in the near-term future, make sure to keep Kansas City Southern on your short list, because like I said, if this stock happens to take a little deep dip, it may be a good time to pick it up. I'm going to buy more. I'm going to work on a dollar cost averaging this, buy it every month. When I see it, looks like a good time to buy, because there will be some dips within the market. I'm just hoping it doesn't keep going up higher, because it's going to make me really wish I would have bought more earlier on. But sometimes you just don't know what's going to happen when you're dealing with the stock industry. Now let me go into a deep dive into the stock itself. All right, Kansas City Southern is a Class A North American rail with nearly 6,000 track mile network serving 10 states in the central and south central U.S. as well as Mexico. With the network spanning across the U.S.-Mexico border through Laredo, Texas, Kansas City Southern provides a direct connection between the U.S. and industrial centers of Mexico. The company's Mexican operating subsidiary, Kansas City Southern de Mexico, is one of the 2 largest primary Mexican rail carriers. So even though there's a whole lot of talk about Mexico and everything going on, I'm pretty sure this is going to still continue to make transport, because Mexico is a big importer of goods here in the United States. Currently, the Kansas City Southern is based in Kansas City, Missouri, the headquarters. Employs 7,200 employees, and was incorporated back in 1962. There's some of the other competitors. Although KSU has growth and revenues over the last 2 years, net income growth has been mixed and is now lower than 2017. But there was talk that they pulled in some there was discussion. They had a new employee. He has worked for a similar railroad company, and he's looking to make some cuts and make some changes. It's possibly why the stock is still performing very well this year. I had recorded this the other day, but then I lost. The image wasn't showing up, so I'm shooting this a second time. So that's sometimes going to happen. I couldn't really locate that other article I found, but mentioned the person's name. But yeah, that's why I'm bullish on the stock right now. Okay, so how does the stock perform? I'm going to go cover this one more time, a little bit more detail. So from November last year, KSU was about the same. Kansas City Southern was about equivalent to where the S&P 500 was. As you can see here, the dark blue is the KSU, which I'm going along here. The light blue down below, that's the S&P 500, how that's performed. So comparing the two, S&P 500 has pulled in 12.95% over this past year, compared to the KSU, which has put in 38%, 38.84% to be exact. And so if you look at me, that is speaking millions, to anybody right now. It's performing a lot better than the S&P 500 is doing. And so it has a lot of term of growth, and it's going to provide a little bit of dividend as well to support that. So it's a good thing to really keep an eye on while the rest of the market is going haywire. Okay, KSU has a P/E ratio that's above average for its industry, sitting at 18%. Industry average is a little bit over 8%. And dividend-wise, it is averaging roughly equivalent to what its peers are doing at 1% right now. And so what do analysts say? Okay, 2 out of 3 give KSU a buy. Only one giving a hold right now is Morningstar. So Merrill Lynch, Bank of America, and CFRA gives a rating of buy. Bank of America gives a $160 outlook. CFRA gives a $156 outlook. And Morningstar gives it a fair value of $132 right now. So what do the bulls say? KSU is building a significant intermodal franchise with access to Mexican ports and an executive bridge to the busiest U.S.-Mexican border crossing, Nuevo Laredo. KCS is well placed to carry containers bound for Mexico and the U.S. That's good. Second time. So what the bulls say, KSU is building a significant intermodal franchise with access to Mexican ports and an exclusive bridge to the business U.S.-Mexican border crossing. KCS is well placed to carry containers bound for Mexico and the U.S. Kansas City Southern produces operating ratio vastly improved from just a few years ago, on par with the average for Class 1 railroads. Class 1, is the highest rating for railroads. In Mexico, the firm receives attractive rates and pays less for labor. Historically, when disclosed, the Mexican operating ratio was several percentage points better than that produced by the U.S. operations. Then you have the bears. What do the bears say? The bears are saying KCS derived from about half of revenue from assets operated via concessions, not ownership. So political economic conditions falter in Mexico or Panama, operations could be at risk of exportation or unfavorable changes in terms. Expropriation, a little tongue twister. Unlike trucking firms, railroads must purchase and maintain the roads. We project KCS capital expenditures will continue to consume more than 20% of revenue annually. KCS hauls a diverse mix of freight, but its significant grain exposure is highly subject to weather. All right, so that brings us to the end to another great broadcast today. So if you haven't, check down the videos down below. Other videos you may be interested in, some of you might have missed. If you haven't already, make sure you subscribe to this video, like this video, click the bell for notifications. I'm back again next Friday with another passive income video. And stay tuned because this Sunday, this will be a great little episode on Tesla. So I encourage you to check it out. It's not a passive income stock, but it's a growth flyer right now. You need to come check it out. So this Sunday, I'm going to talk about Tesla. So stay tuned, and I'll see you again in a few days.